Hi everybody, this is Lara from Pure Elliott Wave. You're used to me giving you analysis on Pure Elliott Wave, but I've been training a new analyst. His name is Jordan Marshall, and he's going to be producing Euro analysis 5 times a week with a video once a week. For a little while, this is going to be free on the YouTube channel, and we'll have a combination of him producing the Euro and me producing the Euro until we launch this as a product on Pure Elliott Wave on a subscription basis. So if you are interested in getting Euro-dollar analysis 5 times a week, there is a link in the description box down below for you to sign up to a list to get notified when we launch Jordan's analysis as a regular subscription product on Pure Elliott Wave. On the launch date for 48 hours, we will have a special grandfather rate offered, which will never again be offered. So if you want to get that special, really good grandfather rate for this analysis, click on the link below. I'll let Jordan introduce himself. This is his first video for us for Euro analysis.
Hi everyone, this is Jordan at Pure Elliott Wave. And before we get into our March 17th, 2023 Euro-dollar analysis, I just thought I'd give myself a little introduction here, let you know who I am, because you'll probably see a bit more of me moving forward here. I've been trading now about 3 years, and I started in April 2020. My first 2 years, I tried so many different techniques trying to get an edge, trying to be profitable in the markets, and I didn't see really any success until I found Elliott Wave, and I'm glad I found it because since then I just feel like I've had a handle on the markets, just have a feel for it. You're able to make accurate predictions and know when you're wrong with Elliott Wave, which is amazing as a trader. So I'm actively involved in futures, cryptos, stocks, and of course Forex. So I'll be trading all of the ideas that you see, mostly if I think they're worthy of a trade. And in the future, I'll be posting my own personal trades, where I enter, where my stop is, in the comments at pureelliottwave.com. All right, so let's get into the Euro-dollar. Over the past weeks and days, we've actually had a really clean head and shoulders pattern present itself, which could lead to a few bearish weeks, which is also supported by the Elliott Wave count. If you missed our quarterly and monthly charts, you got a link to it on our public Pure Elliott Wave channel, so you can see what our grand super cycle analysis looks like. But we are moving up into the C wave of this triangle. We had our A, we had our B. The A peaked in 2008, the B bottomed out in 2022, and we'll see where this wave C potentially takes us. Our invalidation on the weekly chart, let me make this a little bigger for you here, is at 0.95364, and if that is breached, then we could potentially be seeing a triple zigzag on the B wave to the downside, which is much rarer than the double zigzag. Since B is a complex structure, then C must be a simple zigzag. And within that zigzag for C, we have our cycle wave A being worked on right now, which must subdivide as an impulse or a leading diagonal. Right now we have it as an impulse, with intermediate 1 of primary 1 complete. We're currently going down to our intermediate 2, which would likely find a bottom at the Fibonacci 61.8% retracement. We have labeled X complete on this chart, and I'll show you why in just a moment. Let's move on to the daily. On the daily chart, we are zoomed in here on intermediate 1, and you can see it's a very clean impulse, with wave 3 of 3 being the steepest of all the trajectories in that impulse, which is characteristic of that. And we have our wave 2 continuing downward as a double zigzag. Within a double zigzag, wave W and Y usually reach equality or Fibonacci relationships, which is how we got our first target of 1.02006, or the 618 retracement of intermediate 1, which would be 1.010 0.79. Only a 93 pip difference there, so we have a pretty tight range for that target. Minor X we have labeled as complete, as an expanding flat A, B, C. And we've labeled it complete because this C wave here subdivides the best as an impulse. And this downward candle here subdivides as a very clean impulse to the downside. If this would have been an expanding triangle, this C would have subdivided better as a zigzag, and this would have been D, and it would have subdivided better as a zigzag too. So we have a reasonable degree of confidence that wave X is in fact over, and that we're moving into wave Y. A best fit channel has been drawn around the recent price action to the downside, which will be relevant on the hourly chart, which we'll get to now. We'll zoom into the end of this X wave and the subsequent downward price action on that day. So our X wave we have labeled as complete right here because the previous price action is best labeled as an impulse instead of a zigzag. And then after that X wave, we're starting Y, A, B, C, zigzag at minute level, and then wave A at minute level is subdividing into 1, 2, 3, 4, 5 at the minuet level. So minuet 1 might be complete. It's a very clean impulse to the downside, and minuet 2 might be completing as a zigzag to the upside. Within that zigzag, we have A, B, C at the sub-minuet level, and that C wave is displaying as a potential expanding ending diagonal, where 1 is shorter than 3, and 5 must be longer than 3, and 2 is shorter than 4. All rules have been met so far, so in order for this to meet the rules, then wave 5 must reach at least 1.07083. And we also have upward resistance along that best fit channel. If we do see a rejection in this area, I've calculated a target to the downside for minuet 3, which would be underway very soon, within the next week, at 1.03154. So that's if we see this rejection here. That would be my target. We also have our previous target listed there, and our invalidation for this count overhead is 1.07600 as previously mentioned. So let's move into the technicals and see if that supports or takes away from our Elliott wave count. Looking at our volume indicators on the weekly chart, we did have a doji candle with a volume spike. So in order to see the details of that volume, which way it went, we'll have to look at the daily analysis, which I believe shows us a bearish breakout is more likely from this consolidation. Money flow is currently neutral, and on balance volume has a range that it is formed. However, this range is a pretty steep, so these technical lines only have about 3 to 4 tests each. If it did break out of these ranges, it wouldn't be a major signal, but is something we should keep an eye on moving forward. If we look at our candlestick patterns here on the weekly chart, we do have a shooting star, which was at the top of that trend there, signaling downward movement to come. Currently, we've been consolidating between resistance at 1.075 and 1.050, so a break of either of these resistance levels could result in subsequent price action. We're currently trading above the 200-day moving average, and we don't have too much support to the downside. So if we did see a downside breakout like the Elliott wave predicts, we don't have a lot of support. ADX showing no clear trend. RSI is neutral. Stochastics are currently neutral, and ATR is increasing as price decreases. So we had the increase of ATR while price was decreasing. And then when price rallied, ATR decreased, which lends little support to the downward movement having the most volatility. If we did see more downward movement, that could continue and volatility could increase to the downside. On the daily volume data, we can see that volume increased with downward pressure. It increased with downward pressure. And then when price pulled back, volume decreased, which supports the bearish wave count, bearish movement to the downside. Money flow did have some weak bullish divergence, but these two lows are only a few pips off from each other, so the signal is not very strong. And the candlestick pattern, which I'll show you in just a moment, is much stronger than this weak money flow signal. On balance volume has a recent breakout and a test on that line, but that line loses its significance after a breakout happens. Also, this range is very short, steep, and not well held, so I wouldn't give this breakout too much weight. If we did see a few more tests to the downside and a breakout there, that could potentially be a bearish signal. On the daily chart, I want to point out the head and shoulders that I mentioned earlier. We have our left shoulder, our head, and our right shoulder. Our neckline is drawn from the base where the head began and that shoulder ended, and then the exact same thing on the other side, mirrored. So where the head ended and the shoulder began. This is our neckline, which is reasonably flat. If we did see a closing candle below this, head and shoulders do have a very high likelihood of continuation, so be aware of that. We also had an evening star, a very strong bearish candle, which probably the strongest candle on this chart, honestly. And we had some other reversal patterns before this. We had a bearish engulfing just before that, a weak morning star pattern here, so definitely consolidating, which is why we need to keep an eye on the neckline, keep an eye on that support 1.050. The moving averages right now are overall bullish. The mid, which is our 50-day moving average, is above the 200, and the 13 is below the 50-day moving average. Our 200 currently flat, 50-day is slightly increasing, and the 13 is slightly increasing. So I'd say overall bullish with the moving average situation right now. ADX is whipsawing both DX lines, which is a sign of consolidation, which lends to that analysis showing we need to wait for the breakout to happen. RSI is currently neutral, stochastics are neutral, and ATR is increasing with downward movement. So volatility could increase if we did have a breakout, so be aware of that. Overall, this chart does look bearish to me, especially if we break down our support. It should be the neckline of the head and shoulders on a closing basis if we have a candle close below that, or if you prefer to be a little more conservative, the support level at 1.050, and that would be a candle closing beyond that. So this does support the Elliott wave count, which shows more downward movement ahead of us. Thank you for watching.